Ladies and gentlemen, welcome back to Vietnam Stock Market's Opportunities. It's an honor to hold the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram, Vietnamstockmarket.entry, with the phone number is +84914326556. Or you can also scan the QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She is a personal financial advisor. You can contact her with the email hom.nguyen@vcsc.com.vn with the phone number is +84914326556. We always welcome you to our office in the 11th floor, 109 Duyên Đạo Street, Hoàng Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about BMP. Established in 1977, BMP is the pioneer of Vietnam's plastic pipe industry. In March 2018, BMP's largest shareholder, the State Capital Investment Corporation, divested its 29.5% holding to Nawa Plastic. Subsequently, Nawa Plastic raised its holdings to a controlling stake of 54.4%. And this is the report which was collected by Viet Capital Securities about the main plastics, BMP. On the 11th November 2022, with the current price is 52,200 Vietnam dong, target price 64,500 Vietnam dong. Flat 2023 forward earnings on stable sales margin normalization. We maintain our buy rating for BMP while cutting our target price 8% due to increasing our WACC assumption to 13.1% from 12.2% as we raise our ERP assumption by 1 ppt and increase our cost of debt assumption by 50 basis points. This is partially offset by rolling our target price horizon to end 2023. Meanwhile, we keep our 2023 to 2027 forward aggregate net profit after tax MI unchanged. We increase our 2022 forward net profit after tax MI forecast by 4% to 567 billion Vietnam dong, $22.9 million, more than 167% year-over-year, mainly because we raised our 2022 forward gross margin assumption due to a continuing correction of input plastic prices for the remainder of 2022. This more than offsets trimming our 2022 forward sales assumption as we expect weaker demand for construction materials in Q4 2022. We forecast 2023 forward net profits after tax MI of 575 billion Vietnam dong, $23.2 million, more than 1% year-over-year, which is driven by modest forecast revenue growth of 2% year-over-year and lower gross margin year-over-year as we are conservative on a further deduction of input plastic resin prices from the low base in 2022. BMP's valuation looks attractive at a 2023 forward PE of 7.5 times based on our forecast, compares to the 2-year average of the regional peer LTM PER median of 12 times. Downside risk, weaker than expected gross margin due to high input plastic cost. Upside risk, stronger than expected sales in 2023. We expect modest sales growth in 2023 forward after a strong recovery in 2022 forward. For full year 2022 forward, we forecast 99,900 tons of plastic pipe and accessory sales volume, plus 8% year-over-year, which is down from our previous forecast of 102,700 tons, plus 11% year-over-year due to the weaker construction material demand outlook in Q4 2022 resulting from weaker than expected domestic construction activity, especially from the private sector. However, we note that plastic pipes are mainly used in the later phase of construction. Therefore, we expect plastic pipe demand in H2 2022 will be more resilient compared to demand for steel and cement. For 2023 forwards, we forecast modest sales growth of 2% year-over-year as we expect less domestic construction activity in the private sector to have a prolonged impact on construction material demand throughout the year. We expect 2023 forward gross margin to normalize from its high level in 2022 forwards. BMP's Q3 2022 gross margin jumped to 28.3%, a quarterly level not seen since 2016, compares to 25.1% in Q2 2022 as input PVC and HDPE plastic resin prices trended down for most of 9 months 2022. This strong margin expansion was also thanks to input plastic prices correcting from their high base in 2021. As a result, we raised our 2022 forward gross margin assumption to 25.9% from 24.1%. For 2023 forward, we expect gross margin to fall to 24.3% as we are conservative regarding a further reduction of inputs, mostly plastic resin prices deduction, while there is almost a changing outlook for private sector demand. BMP offers decent dividend yields with low financial risk. BMP has no long-term debt and strong liquidity ratios. We project a 70% to 75% cash dividend payout ratio PA and 2022 to 2027 forwards projected dividend yield of 9.6%, but see scope for higher payouts based on our cash flow forecast. And we move to the 9 months 2022 recap. Margin expansion drives strong earnings. Net revenue, BCSC comments. BMP did not disclose sales volume for Q3 2022. Nevertheless, we believe the strong revenue was driven by the recovery of domestic construction activities post-COVID. Plastic pipes are mainly used in the later phases of construction. Therefore, we expect demand for plastic pipes in H2 2022 will be more resilient compared to demand for steel and cement. SG&A expenses. higher year-over-year due to BMP increased trade discounts for buyers to strengthen its distribution network post-COVID and push sales volume. BMP's Q3 2022 trade discounts for buyers amounted to 76 billion Vietnam dong, 3.1 million US dollar, less than 28% Q-of-Q compares to 3.2 times year-over-year. BMP's 9 months 2022 trade discounts were 257 billion Vietnam dong, 1.4 million US dollar. To put these results into perspective, BMP's trade discounts for full year 2021 were 150 billion Vietnam dong, 6 million US dollar. Financial expenses higher year-over-year as BMP increased payments discounts for buyers to strengthen its distribution network. Net profits after tax MI 9 months 2022 earnings beat our forecast mostly due to higher than expected gross margin. We note that BMP's earnings in 9 months 2021 were negatively impacted by abnormally high input plastic prices and stagnant sales in Q3 2021 due to COVID-19. Gross margin BMP's gross margin jumped to 28.3% in Q3 2022, a quarterly level not seen since 2016, compares to 25.1% in Q2 2022 as input plastic prices trended down in Q2 20 and Q3 2022. Let's go to the part named 2022 Outlook. Strong earnings recovery from low base. Revenue. Even though 9 months 2022 sales were positive, we trimmed our 2022 forward sale volume assumption to 99,900 million tons, more than 8% year-over-year from previously 102,700 tons, more than 11% year-over-year due to the weaker demand outlook for construction materials. In Q4 2022, amid stagnant domestic construction activities, especially from the private sector. Gross margin, gross profits. We revised up due to better than expected gross margin in 9 months 2022. SG&A expenses. We increased our 2022 forward SG&A assumption to reflect the higher trade discounts that BMP provides to buyers to push sales. We note that high gross margin in 2022 forward net profit forward also enables BMP to increase SG&A spending for the purpose of solidifying its distribution network. Net profits after tax MI. Strong year-over-year growth as sales volume recovers from COVID-19 disruptions in 2021 and margin expanded amid the correction of input plastics prices. Gross margin. We revise up our 2022 forward gross margin assumption to 25.9% from 24.1% due to better than expected 9 months 2022 gross margin and the ongoing input plastic price correction. SG&A per sales. We revise up our 2022 forward SG&A expenses to sales ratio to 11.1% compares to previously 10.3%. As we expect, BMP continue to increase its sales and trade discounts for buyers to push sales for the remainder of 2022. And next, that is the 2023 outlook, stable sales, margin normalization, prompt flat earnings. Net revenue, we forecast modest sales growth of 2%, year-over-year in 2023 forward, as we expect less domestic construction activity in the private sector to have a prolonged impact on construction material demand throughout 2023. SG&A expenses, we expect a more challenging outlook for market demand and a lower gross margin forecast to prompt BMP to reduce trade discounts from a high base in 2022 forwards. Financial expenses. We expect a more challenging outlook for market demand and a lower gross margin forecast to prompt BMP to reduce its payment discounts from a high base in 2022 forwards. Net profits after tax MI flat year-over-year, which is driven by modest sales growth and EBIT edging down as we are conservative in forecasting a margin expansion from 2022 forwards high base. Gross margin. We expect 2023 forwards gross margin to fall to 24.3% compares to 25.9% in 2022 forwards, as we are conservative regarding a further deduction of inputs, mostly plastic resin prices, while there's also a more challenging outlook for private sector demand. And now we move to the next part, that is valuation. We continue to use a combination of the DCF 70% weighting and PE 30% weighting methodologies to derive a target price of 64,500 Vietnam dong per share for BMP. Our DCF derived valuation is 9% lower compared to our last update report because we increased our WACC assumption to 13.1% from 12.2% as we raised our ERP assumption to 8% from 7% and increased our cost of debt assumption to 9.5% from 9%. This is partially offset by rolling our target price horizon to end 2023. Meanwhile, we keep our 2023 to 2027 forwards aggregate net profits after tax MI unchanged. Our PE derived valuation is 6% lower than our last update report as we lower our target PB to 10.9 times from previously 11.9 times to reflect our higher WACC assumption. This is partially offset by applying higher 2023 forwards EPS of 6,948 Vietnam dong compared to average 2022 to 2023 forwards EPS of 6,604 38 Vietnam dong as previously. The lower DCF derived valuation and lower PE derived valuation results in our target price decreasing by 8% to 64,500 per share from 7,000 Vietnam dong per share. As previously, Year 5 valuation summary. Discounted cash flow, DCF. We continue to apply 5-year DCF valuation and a terminal growth rates of 1%. Peer P multiple. We select plastic pipe producers in China, Japan, South Korea, and the Philippines to form a comparable universe for BMP. In H1 2021, the share prices and earnings results of BMP's peers reflected high plastic prices. As such, BMP's peer group median PE dropped to below 10 times in mid-2021, while the peer group median PE started to recover starting in late 2021, which reported earnings in H2 2021 caused BMP's PB to jump to over 20 times in Q2 and Q3 2022. BMP's share price started to reflect positive 2022 forward earnings from the correction of input plastic prices, which resulted in BMP's BP dropping to low teen level. Therefore, we maintain our reference target PB for BMP at 11.9 times from our last update report, and now discount this rate to 10.9 times to reflect our higher WACC assumption. We believe that BMP deserves to trade at least on par with its peers due to the company's superior profitability. 2022-2023 forward ROE of 25.4%, 24.5% compares to peer median TTM ROE of 6.4%. Local peer in farm plastic. Regional peer. Historical price to earnings ratio PE of Vietnam plastics and peers compares to peers. Recommendations history. Actual price, target price. Financial statements. You can take a look on the screen. And that brings me to the end of my presentation about Vietnam plastic. Hope this video and some information will be useful for you, and have a nice day. Thank you for listening.